Alright guys, welcome back to another Monday of market craziness. So this last week was a very sad week for a lot of people. All of last week, as you can see even in my own portfolio, pretty much every single stock, including crypto, Bitcoin mainly, sank quite a bit. It's been pretty bad all of last week and people were definitely panic selling and whatnot. One of the key things you want to keep in mind if you're going to be investing in crypto is that you have to stay strong, right? There's a saying that you should buy low, sell high. So if you buy Bitcoin and then it starts going down, and this is pretty much true for a majority of stocks, if you buy a stock and it goes down, or if you buy crypto and it starts going down, you really want to stay strong and hold on to it in hopes of it coming back. And again, you should have never bought it in the first place if you don't think it'll go up or stay high. So everyone that's buying Bitcoin, of course, right now is in this mentality of what the big people in investment have said, right? That it's going to hit 150 over the next year or hit 500k over the next 2 to 3 years and so on. People have had all their predictions all over the internet because everyone loves to chase clout. So now, if you believe in that, then you should buy a Bitcoin. Now, if you buy it at 50k and it starts going down and it starts hitting 40k, you don't want to sell because then you'd be selling at a low, right? If you firmly believe it's going to come back up, which it always does, then you have to stay strong and hold on to that, right? It's just pointless if you sell even at 45k. Say you bought it at 50 and you sell it at 45k because you think it's going to hit 40. Well, what's the point, right? Because then you're going to buy back in later on anyway, and it's going to end up being the same thing. You go from 50 to 45, you lost 5k, you sold it, then it went down to 40. If you buy in at 40, then you're great. But what if it doesn't do that? What if at 45 it starts lingering around in that area, comes down to maybe 43, comes back up? It really comes down to how you're managing your money and how much you care about little and big gains and losses. Also keep in mind the realization of gains and losses, right? This is pretty key in taxes. If you bought Bitcoin at 5k like a year ago, and then it went up to 50k, you haven't made any money whatsoever as far as taxes are concerned until the moment you sell the Bitcoin, right? So as long as you're still holding it in the stock portfolio, it's not a realized gain, nor is it a realized loss until you sell and you take that big hit, right? So you want to be very careful in evaluating when to buy, when to sell. Don't be weak because you can lose a lot of money like that. So you got to be very careful in not acting out in a panic mode. Now, one of the beauties of drops, one of the beauties of stocks going down and prices going down is that it's a great time to buy in, right? Because you want to buy low. In this video, I want to talk about my top favorite dividend picks, right? So I'm going to talk to you about how I decide which dividend portfolio, well, I have a dividend portfolio, but which dividend stock to dip into, what to grab, and how much of it to hold on to eventually realize the dream of having passive income, right? So I started doing this over last year, and there was a lot I started learning. In March last year, pretty much exactly a year ago, all stocks faced the same exact drop. So if I pick something like AT&T, for example, one of the very common dividend paying stocks, right? So you could see, of course, in March, around March 4th, 2020, everything started falling. And then by March 23rd, March 18th, they had hit rock bottom, and then they tried to stay stable or come back up, right? So AT&T did exactly that actually, right? They fell and they've been stably at that point ever since they fell. And in the 5-year status quo, it looks like they were kind of, all over the place because they have had many business changes and intense competition with the other telecom company, T-Mobile, as well as other things like Verizon and Sprint. So there's a lot always happening, and one of the key things you want to look into when you're buying a stock is the industry is part of, right? You really want to make sure you understand that industry, and I'm going to teach you guys how to do that research as well very easily. So for most of you that don't know me, of course, I also have a teaching account. My other YouTube channel is USMLE Live, where I teach for the United States Medical Licensing Exam, and I've always had a passion for teaching. I'm actually a doctor in New York, and I love teaching people for those licensing exams you have to take to become a doctor. I also love teaching about stocks because this was something very fun for me to learn, and there's so much potential here at this time and era where things are dipping, because now, of course, in the next few years, we're all hoping things are going to get a lot better and things are going to start coming back up. They already have been coming up ever since March, ever since that dip. And of course, now that things like vaccines and whatnot are rolling out, more things are starting to come back up. So I like combining my healthcare knowledge with stocks because even in the stock industry, many things like certain penny stocks that are under $15 a stock that are healthcare related have had their massive moments of skyrocketing. One of the most popular ones is something called ZOM, ticker symbol, Zomedica. Right? This is another healthcare services stocks that's a penny stock that has had many moments of, extreme increase. Where imagine if you owned it at 0.16 cents, now that it's at $2, that's a massive return, right? So that's kind of how penny stocks work. And even lately, in the last month and 3 months, it's had many instances where it had big increments. And of course, it's a penny stock, so what's considered big here is different than usual. But the penny stocks are all about how many you own, right? So usually people own 1,000 or 2,000 of them. So small changes have big impacts. But I like using my knowledge to bring that in. Now, with dividend stocks, there's a lot to look at. So on the top right, you can see my dividend stocks portfolio thing, where basically I have an Excel spreadsheet of different stocks. These are the ones that pay quarterly. These are the ones that pay monthly. And these are some other stocks that I'm doing more research on, but not really significant for this video. What I'm going to tell you guys are my top picks for dividend stocks. So the first one I want to talk about is CIM. CIM, so let's look up everywhere. So on Robinhood, we'll find it right here. Just type in CIM, Chimera Investment. It's an investment services real estate stock based in New York, which is where I am as well. So this is a stock that's worth right now $11.76. Over the last year, basically, it's had a pretty steady trend of somewhat recovering from that major dip that every stock took. And if you look at the 5-year status quo, even in that 5-year term, it was going up, right? Generally speaking, the slope from this point to all the way to this point is upwards, right? So it's been going up, and it's had a moment where it was basically lingering around the 18 to 20 range. Right now, it's about half of that, right? So you can see two forms of return here. One, it'll be paying you in dividends. Two, it's going to go up in value itself, assuming that it's going to recover to even half of that value that it was at before the big dip in March 2020. So how do you decide if a dividend is a good one to invest into or not? Because you're going to be buying eventually about 100,000 of them over time, so that you can have passive income from it. But you want to start with whatever you can, and then do continuous reinvestment into the same stock until you own more and more of it. So how do you figure out which one's the best? Well, you could look at the dividend percentage, right? What percentage dividend yield it gives. And CIM gives 10.18, or let's just say 10%, which is definitely the highest of all of these that we see here, right? So some of these are AT&T, Gilead, the company that's a pharmaceutical company that made remdesivir, which was seemingly a potential treatment for coronavirus way early in like March, April 2020. NHI is National Healthcare Investment Services. It's another medically related stock that actually pays a really big amount, but it's a very expensive stock as well. MOKO, Coca-Cola, there's a bunch of these here, and there are plenty of dividend paying stocks that pay quarterly dividends, which means that you get paid a dividend every 3 months. So already you can see that 10.18% from CIM is a really big percentage. Another thing I personally like to look at is the cost to payout ratio, right? You want that ratio to be very small. You want the stock to not cost much, and you want the stock to pay you a lot. So that ratio would become a number very small. And it has the smallest one on my list, about 40, right? So CIM is undoubtedly one of the best dividend paying stocks that pays dividends quarterly for you to invest into. If you own 100 of it, every 3 months you'll get paid $43. And I'm looking forward to this stock going up in price, because it's supposed to be, before the big dip occurred, before coronavirus hit, it was supposed to be at the 18 to 20 range. And had coronavirus never occurred, it looks like in the past 5 years, it was on an upward trend, right? So things are going pretty good for it. And I'm a New Yorker, so I'm a pretty diehard fan of any stock that's related to New York real estate. I know that during the coronavirus pandemic moment, many people left New York and many businesses had to shut down. And this was very true for New York more than many other states. But now that things are coming back to being normal and the vaccination and everything is rolling out, I see a lot of this recovering and also booming for sure, because this is the opportunity everyone's going to grab to try to sign long-term leases in New York, and then start businesses and whatnot. So that's number one. Now the rest is going to be about monthly stocks, because I personally really like monthly paying stocks a lot more than these guys. Now at the moment though, I don't own any CIM, because I, as you can tell from the way this list is, only recently learned about it. Previously my favorite stock was actually Lumen. That's the second best payout ratio here, right? And it's not the best percentage though, as you can clearly see, right? 7.38, 7.46. KMI and Lumen are pretty close to each other, right? But Lumen was a very interesting stock when I first discovered it, just scouring the internet. I actually ended up buying this at a pretty cheap price. I bought it, let me see, where's my history? This is all they're showing. Well, I sold it at 11.81, but I had actually bought it at a lot cheaper than that. I'm not sure why that's not showing here. So even then, and now it's at like 12.60, so I could have held and sold it at more, but it was, you should never be ashamed of any profit you made out already, and that's amazing. So this stock has some really interesting trend to it. If you look at the 5-year, you can't really see on this trend where coronavirus hit. It's very not clear, right? And that's because this stock was just sinking from the beginning. But they have a very high payout. Dividend is 7.38%. That's pretty high percentage. That means that of all your investment, about 7.38% of it will come back to you in dividends every year. That's really interesting to me, so I went ahead and picked it up. I believe I bought it at around like 10.40, 10 something like that, $10 or something, and I had picked up about 200 of it. So when it hit 11 something, I was like, oh shit, this already went up quite a bit. I think it might sink again, which is, you know, pretty understandable. So I sold it. This was a really good stock. I owned a lot of that, and right now on my portfolio, from these guys, I'm holding quite a bit of them because I was learning a lot from them, right? So I have AT&T, 400 shares of it. It's actually gone down in value. I'm waiting to get back money on it, and then if this goes plus, I'll sell it all. AT&T is one of the most stable ones. It's a great one. It pays 6.6%, cost to payout ratio of 60.7. I would get $52 for every 100 of them, so I own 400 of them, so I'm gonna get about $200 out of it, right? And that is gonna eventually cut out the losses here. But I feel like AT&T will definitely come back up to, like, just last week it wasn't that low actually. It was pretty green just sometime last week. So, you know, it's had its moment. You see how much it sank pretty recently, but in February 17th it was 29.69. I bought it at 29.42. You know, so it hasn't broken the 30 mark, and I'm waiting for it to break the 30 mark, and then I'll get rid of it. I don't plan to hold AT&T for much longer. I own a couple. I own a bunch of different ones, but my plan now ultimately is to sell my dividend stocks after I get my first payment out of them, and if they're green still, and invest it all into CIM. That's what I'm going to be doing, right? Because this has the best ratio of payout. So I'm going to buy as many CIM as I can right now before it goes more up in price and breaks that $12 barrier, and let that sit and pay me in dividends, right? Now let's look at the monthly ones. In monthly dividends, the beauty is that since you get paid every month, a lot of these effectively pay more in the 3-month period than some of these quarterly stocks would. So that's pretty interesting. Now here you can see right off the back, right, if you look at the percentages, the highest percentage is the one way at the top, ORC. Right, and then you have PSEC, Horizon, PFLT, Gain, Main, LTC, which is not Litecoin, that's LTC Properties, and O. But if you look at the cost to payout ratio, you can already see that the best cost to payout ratio is ORC, just like its dividend is the best. But the others have some similarity, like these two guys, PSEC and PFLT. Now there's a couple things you need to look at before you actually buy some of these stocks. As you can see, I own PFLT, I own 1,000 shares of ORC. I've been buying them over time as I was learning about them and grabbing them instantly if they were cheap. But how do you do your research? So that's what I want to teach you guys. On the left half of my screen, I have all of my research tools. The first thing you're seeing here is Yahoo Finance, which gives me a pretty nice understanding of what's happening today in everything, you know, across the different industries. You have your S&P 500, Dow, everything, right? Crude oil, and of course the dollar. You have webull, which is another great website and a great app for buying stocks and trading. You can definitely install that. The link below in my description will tell you everything for installing webull as well as Robinhood. There's Finviz, which is a very in-depth website that lets you see a lot of information about different stocks, and their stock charts, which is also something that you can use if you're proficient with the way these lines and patterns are supposed to look like. And if you're learning that from someone, then great. Eventually, I also plan to teach how to make these lines, how to analyze stocks, and how to use your money effectively, right? Because you're investing a lot of money into these over time. You want to know what you're doing. So first things first, let's take a look at ORC, right? ORC. So we're going to go on Yahoo Finance and just type it in. It's Orchid Island Capital, right? And then on the tabs over here, you want to pick the historical data and change this to monthly, and then you can see how much they've been paying every month. This is how I got the data I put here, right? The rest of the data came from webull. So if on webull, if you search up ORC here as well, this box right here gives you the rest of the information I have in my table here, right? The open and high, how much it's been lately. You really want something that hasn't sank to trash lately, right? Because then you risk going back to that. So this thing has had a high of 590 and a low of 575 right now, and the 52-week high has been 62. The 52-week low is 1.5. So of course a lot of things are not ruined because of the 52-week low aspect, simply because that's a year, and a year from now was when coronavirus did that shit, right? So a lot of stocks have a very bad low, but over time it looks like lately this stock has been going up, right? So if we look at also on Robinhood, the same thing, ORC, right? And then we can look at how it's been doing in the last 3 months. Pretty stable, upward trend, right? In the last 1 year, same thing. It's been having an upward trend. That's pretty nice. And then if we look at the 5 years, it's been going slowly downwards for whatever reason. So then you consider the industry, and this is Florida real estate, right? Florida real estate. So for whatever reason, for some reason, it's been going down. But even at its lowest moment before coronavirus hit, it was around the same as it is today, which means that it's very likely it might have hit the point it's going to stay on, or it's going to go above. But since this stock pays such a high dividend percentage, 13.79, it's worth grabbing. You're going to get a lot back over time, right? For owning 100, you'll get $6.50, right? That doesn't sound like a lot, but over time that builds out to a lot. And owning 100 only cost $582. Right? So again, you want to look at your cost to payout ratio. You were able to own 100 of ORC for $582, $580 today, right now as I'm making the video, and you're going to get back $6.50 every month. $6.50 every month. And if you own much more, you get more back. So I own 1,000 of this right now, right? I have 1,000 shares of this, so I'll be getting back $65 from holding this every month. That's pretty nice. That's very nice. On top of that, the beauty of it is this is far better than putting money into a savings account, where in today's time, right now in March 2021, there's barely any yield from a savings account. The interest you're getting back is often just 0.06 or 0.05%. That's nothing. That's trash, right? I mean, sure, savings account guarantee that your money is going to sit there and nothing's going to happen to it. It's not going to sink or anything like that. But again, you want to be very intelligent with the stocks you buy and look at all the things we just looked at. Of course, it's not guaranteed, but it's pretty confidently establishable that your money will be safe, right? It's not going to just drown and disappear. Can it? Of course. But will it? Very, 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 very unlikely. Overall, though, it's pretty safe, and no stock is just going to boom disappear. If it starts drowning, you sell it, right? Overall, though, this is looking pretty good, and if it was able to do this throughout the year of coronavirus, then that's pretty nice, right? It was able to start going back upwards pretty quickly after the COVID hitting the market, and I'm pretty happy with it, right? So I went ahead and bought 1,000 of it, and I'm going to try to keep every month I'm going to invest a certain amount of my paycheck into ORC. That's a very cheap stock with a very high dividend yield. So that's a lot of money you can get as per the cost to payout ratio. The other two that I really like are PSEC and PFLT. The other two guys here who have that 112 cost to payout ratio. So it's over 100. Not exactly preferable. I don't like cost to payout ratios that are over 100, but these two guys are very good. Previously, I owned a lot of PSEC, right? I had I think 500 PSEC. Yeah, I had a bunch. So if we look at here, they're showing full history. So I actually ended up buying PSEC at 540. I bought 500 shares of it, and for owning 500 shares of PSEC, so we're looking at PSEC right now. Owning 100 shares would give me $6. Since I owned 500 of it, I was getting $30 every month. That's like a free gym subscription right there, right? That's paying for your gym every month in a sense. Paying for something every month in a sense for sure. And that was wonderful. But then the stock started to go up so much that I was like, oh wow, the amount of money I'm getting back from 2,700 to 3,000, I'm getting back $300 right away from selling it. Forget the 30, right? $300 is like 10 months of dividend payments from the stock. So I went ahead and sold it because I was under the impression that it might go down. However, lately it's at $7.30, and it's been lingering around that for some time now, right? It's had some highs where it even almost hit $8, like right here, $7.98. So that was pretty nice. But again, never cry about anything if you actually made a gain, right? I made a gain. I'm very happy with it. It's perfectly fine. But the beauty is that, you know, when this low had happened, when everything dropped in coronavirus times, that was a wonderful time to grab this stock. Wonderful time to grab the stock, because then not only did the stock go up, so your sitting money actually became more, but the interest, quote unquote, dividend payments you're getting here, when I'm comparing to savings accounts, was significantly better, right? So PSEC, wonderful. Even now at this moment with the higher price that it's at, 737. So if I update this, it'll update the percentage right here. So let's put it to 7.37, right? Now it becomes 122, right? So that's what PSEC is looking at now, right? The cost to payout ratio is 122, but it's still a very nice stock to grab, and it's worth grabbing because the point is that there's a chance it might actually go up in value. So it's still paying the same 0.06, and the dividend amount can also increase if the value of the stock goes up quite a bit and stays stable, right? So that's something that can occur. The next one I want to talk about now, last one, is PFLT, which I also own right now. So PSEC I didn't buy back into, but I do own PFLT. Right now, PFLT is at $12.10. So if we update this table right now, right, $12.10, then you can see that number became 134 now, right? I bought it at 11.44. I bought 225 shares of this, right? So it's gone up in value. Total return $150. It's already gone up in value, which is something that would never happen in money you put away in a savings account. But on top of that, I'm gonna get back a pretty nice $9 from this every month for every 100 stocks I own. So I own 225, so I'm gonna get almost $25 back every month. Right? That's the dividend I'll be getting back. And over time, my goal is to own more and more of this. The stock that I'll personally be focusing on the most is ORC. I want to grab as many ORC as I can and maximize my dividend return from it, and eventually have so many of it that I can just enjoy passive income, right? Now, how do you see other information about these stocks? Well, that's what I had to show you over here on the left half of the screen, right? The last thing I want to kind of show you guys here is ORC on this side. So if we look at it on FinViz, right? There's a lot happening on this screen. There's clearly too much happening. But one of the cool things I want to show you guys is if you follow any other YouTubers that talk about, oh, buy this stock because it's doing X, Y, and Z, and this is the beauty of it, blah, blah, that's news. And you can see all the news relevant to a stock right here. This is wonderful. The one that I personally like looking at is what Business Wire has to say about each of these stocks. That's the most significant to me. There's other resources here, Globe Newswire, sometimes even Zacks, Access Wire, and the Motley Fool is often here as well, right? You can see what the stock is up to, what it's doing, and if they're doing anything interesting that might make the value of the stock go up pretty soon, that's when you want to make sure you grab it before it goes up, right? So if there are any stocks under your radar, you do this. Now, coming back to here, CIM, you know, with the least cost to payout ratio, looked wonderful, but there's another one, EPD, as well, which is a pretty close cost to payout ratio, right? Almost 50, just like this other guy over here also, MO. Now, they're all different from each other because cost to payout ratio, yeah, sure, it's wonderful, but it really depends on how much money you want to invest. CIM is the cheapest, EPD is the second of those three, and then MO is the third most expensive of those three that have a nice cost to payout ratio of 50 or below, right? And Lumen is not so safe because it was always sinking, so I wouldn't invest in that. But EPD is actually looking really wonderful. Look at what we're going to look at right now for EPD, right? So when we look at EPD today, it's at $22. It had quite a big jump from 21 to 22.29, right? That's depending on how much you own. That's pretty impressive. Over the last month, it's been going up. Over the last 3 months, it's had some weird hiccups. And over the 1 year period, it's generally had a pretty nice recovery phase where, at the very minimum, it was at 1537, but then it's stayed pretty good. Now, let's look at the 5-year trend. How is it done? Pretty stable. So what we're looking at here is what are those minimums? Where is it basically holding at? What's the minimum it kept going to? So it always seems to be above 23. It's 23.98, 24.53, 23.96. All these down points are above $23. So it looks like this stock likes to stay above $23 no matter what, right? And you're never planning to sell a dividend stock because you're just going to hold it there. That's your money saved and put away, and you're going to keep getting dividends back. So if you can buy it right now, this is a great time to go ahead and grab it. I'm personally going to wait a little bit to see if it goes down a little more, sell some of my other stocks I own, and then put that money into here. Now that I know my main dividend portfolios that I want to be holding, my personal dividend portfolio is going to have as many CIM, EPD, and ORC and PFLT as possible. Those are my 4 main picks, and you can look up everything you want to about them using the tools I've shown you right here. Right, so that's really all this video was supposed to be about. I really want you guys to be able to know how to figure out the stock to buy, where to invest your money, what it is that's interesting about each stock, and start developing your dividend portfolio before these stocks start going back up in value again, making it more difficult to buy them. Right? So happy investing to all of you guys. Leave a comment about what you might have liked here, what else you want to hear about, and what stocks you're looking to get into, and other types of portfolios you might be interested in. The next video I'll make will probably be about penny stocks and how to figure out which penny stock is the one that you should be watching and buying right before it triples or quadruples in value, thereby literally quadrupling your investment. Great way to make massive amounts of money in quick manners, but you have to be very careful because where you can make massive amounts of money, you could possibly lose it as well. So I'll see you guys then when I make that video. Thanks a lot for joining.